Another rough ride on Wall Street. Markets down again. Volatile seems to be the financial word of the moment. To help make some sense of this, senior wealth advisor Brad White joins us to talk about your money. Brad, no easy days right now. It seems like we're talking about the markets a lot, but let's focus today right now on the stocks themselves. How much of this moment and what we're saying is about stocks being overvalued?
Yeah, there's no doubt, Carlo, that a big part of this drop and a precipitous drop that we've seen in this wild ride this year in 2022, there's no doubt that a big part of that is because of how expensive stocks were as we entered this year, 2022. The subjective part heading into this year, though, was are stocks simply expensive, but justifiably so, or are they actually overvalued? Now, let's kind of put this into context. Last year, the market made almost 30%. In 2020, the market made almost 20%. In 2019, the market made over 30%. So I think we all know, conceptually, the markets just don't go up in a crazy straight line forever. Eventually, they kind of overdo it and they correct, or they overdo it the other way. And over long periods of time, it kind of equals out. So the reality is we had almost 80% of gains the last 3 years heading in this year. So as a general rule of thumb, yeah, that's going to breed an environment where, the market's pretty expensive. It's going to have to pull back here a little bit. But here's the reality. I just mentioned this a minute ago. The market was expensive. Everybody knew that. But under the old conditions that we were in, which was easy monetary policy, which we've been in for a decade, which was historically low interest rates, which we've been in for over a decade. Under that environment, it was justified that stocks could be expensive. The big giant curveball that hit us like a ton of bricks that no longer creates that environment is inflation. And that's the other big part of what's happening in the markets right now.
Yeah, and Brad, let's talk about that. Inflation is a huge problem. It impacts the actual stock prices because revenues are down for companies. There's a lot of impacts that it has. But one of the cures that's talked about also has its own dangers. Raising interest rates, that could be a problem for the economy as well, couldn't it?
Yeah, I think a lot of our viewers right now are probably hearing terms like the Fed is trying to have a soft landing, or the Fed is trying to thread this needle. And so I want to explain what they mean by that and why this is so important, okay? The biggest tool that our Fed has, that our country's monetary policy has when inflation rises. So when inflation rises, nobody likes it. We all feel the pain right now. So everybody's clamoring, can we stop inflation? Well, guess how we do that? We raise interest rates. But when we raise interest rates, here's what happens. It automatically pushes the value of things like stocks down. Okay, so when interest rates rise a lot, it can push the price of stocks down. So that's one impact of higher interest rates. The other impact is it slows down economic activity. Obviously, it's more expensive for all of us to afford housing, for all of us certainly at the pump right now, for companies, right, to service their debt and maybe pay employees more. So when inflation happens, it lowers economic activity, it lowers company earnings. And if we lower economic activity too much, we get to this recession, which is another thing our viewers are hearing right now is, can we do this without heading into a recession? So here's the needle that we're trying to thread. Raise interest rates, which will help inflation, which everybody wants. But if you do it too much, you're seeing what we're seeing right now in the stock market, which is stocks are going to pull back, chatter of recession is going to happen, and how do we thread this needle? So that's a big part of what's happening in 2022, Carlo, is the environment changed as 40-year highs on inflation, interest rates rise, and the market had to go, whoa, we've got to reset the value of this thing. The good news is the market right now is trading around 16 times earnings, which is a technical way of saying if you look back at the last 50, 100 years, that's about average. So they're not expensive anymore. They're not terribly cheap. So a big part of this drop has gotten us back to kind of a fair price. The reality is we have to watch going forward and hope inflation doesn't continue to get worse and that we've at least kind of peaked on some of this pain that we felt on this inflation the last year.
Brad, almost out of time. I'm going to throw a little bit of a curveball at you. A lot of people say, markets are low. It's time to buy them. But it seems to me like things are a little bit unstable right now. Is it a good time to jump back in, or maybe is it a time to pause and take in a little more information?
My opinion on this is if this is money you don't need for 5 years or certainly 10 years or longer, absolutely. Right now is a pretty good time to buy. Could it go down a little bit more from here? Sure, but you're never supposed to time the absolute bottom. That is lucky more than anything else. If you're sitting here thinking, hey, I'm going to roll the dice and I need this money 6 months from now, I wouldn't do that in general because, again, I could really see this going either way in the short term. But over the long term, yeah, right now is a much better time to buy than it was, let's say, the last year or two from a value standpoint.
All right, rocky ride. Senior wealth advisor Brad White to help us navigate some of those seas. Appreciate your time as always. Talk to you soon.
Thanks, Carl.